today's video, we're going to take a look at a setup in Caterpillar. Now, I guess we don't have earnings there until April 29th, so that's good. And I did find a nice bullish pattern of higher highs and higher lows. And even though the moving averages are not necessarily, you know, all on the right side here, I like the symmetry that I'm seeing. And symmetry is essentially similarity or equality when comparing swings in the same direction. And you can see that these all look kind of similar. I ran the projections from the recent high. I also ran retracements of some of these prior swings, and we do have a cluster that comes in anywhere from this 127.98 area to 130.46. So if price continues to hold above that general zone, I'm okay with looking at buy triggers in Caterpillar. Now, if this low ends up being a more important low, then the upside potential is going to come in at the 1272 extension, or that, at least that is target number one that I typically look for. So that's, you know, typically when you have a pullback, if it's you know, in a good trend, it's going to extend to the upside and then maybe pull back, and then extend to the upside and then maybe pull back and then extend to the upside. So if the pattern's going to repeat itself, you know, that's what we're going to look for. When are we wrong? We're wrong if it takes out this zone. Okay, so if it takes this out, know that I'm not going to be looking at the buy side anymore. So risk to reward is decent because, you know, you can either define your risk either under the low made prior to your buy signal or underneath the zone. Underneath the zone would be a little bit more risk at this point. But that's the potential, you know, to just have maybe risk just a little bit underneath this low for potential reward up at this 145.90 area or even higher. So let's see if this zone holds and trade accordingly.